Hello everyone, welcome to this weekly forecast, weekly fundamental analysis video and live stream. I hope you guys have a good day. This week I'm going to be very active, streaming almost every living minute I have, or starting to do that. So there's going to be way a lot more streaming this week, so don't worry. So what's important for next week? We're going to go through that. We're going to go through what does some of the major outlooks for this week look like. What do we look out for? What should we not be looking out for? And all that shenanigans. If you guys are new here, thank you very much and welcome. I hope you guys would enjoy it. And then if you could get a like, then that would be great. You're not able to comment because this is a YouTube members only, Eivindfx members only video. It's publicly available, but it will be made for members only. I am only there to kind of, so you can see what we do here, and then if you want to join in, it's totally up to you. I do this because you guys request me to, not because I'm gonna bother you. This is pure engagement for you guys. So, what's kind of important? What is important for next week? So first of all, the industrial production data from China is always important. That is important for the European, for the Chinese, for the Australian market in terms of how economic performance is really going. And what else to watch is, well, it's not necessarily very important today and straightforward right now, but it's important as of general to be looking into what is happening in China, what is happening in Taiwan. Are they going to be invading them or not? So straightforward. And then there is a surge in COVID cases in China, surging inflation, weak demand. So that is, worrisome to many extents. In America, we still have pretty good or very good and unemployment. On a historical low, but it's pretty low. It's pretty good. So that's something to continue to look forward to and analyze. Of course, inflation is important to look out for as always, and retail sales comes out this week, as well as industrial production. And retail sales, you can kind of also see that in relationship to inflation. And retail sales is basically just measuring what retails, also what consumers are buying, and it's supposed to remain weak as prices is rapidly increasing. And then we saw last week the CPI in America came lower in, and then people started saying, oh, inflation has peaked. Is that really what is really going on here? Can we really say that inflation has peaked? Yes, it has gone from 9.1 headline to 8.5 headline year over year. Yes, we can say it has peaked to some extent, but still don't be like, oh, we're going to sell dollar now. You need to see a trend in the market peaking, yes, but also need to see continuation. But if you want to start looking into dollar weakness now, that is all up to you. I'm not going to make you do it or make you do anything else you don't want to do, but I think it's still a bit too early and a bit too opportunistic. And I haven't really seen the market pricing in a shift in inflation. But the more we see retail sales and other supporting inflation numbers, now that is going to be interesting and important for us to look forward to. Okay. So in the meeting minutes from the Fed and RBA, will be released in the coming week, and GDP data from Eurozone, Thailand, Japan, Netherlands, Poland. That is important data. Why is that important data? Because are we going to continue, or are we going towards a recession? Are we there, kind of a thing? the other thing we also need to look into is how is the fall going to be now? What is our forecast? What is their forecast? And what is really going to happen? And then UK, so Bank of England, sorry, is already thinking about there will be a recession, and not anytime soon, but at some point between now and 2023. I guess I set up a specific one, but I believe it comes a bit before that. Europe is supposed to have some kind of recession next year. Are you going to be buying the pound and the euro in that scenario? Probably not. Also, in terms of against the dollar. The other question you need to ask yourself is fundamentally, have we priced in the bottom in the stock market? Have the crisis theorists had so much headwind in the news? Are we now done talking about the bottom of the market? Are we now done talking about the recession is coming? Are we done talking about all the people being laid off? Are we done talking about all the missed earnings? No, and we will never be. That will be not recession won't be constantly be there, but constantly fear, constantly talking about, or will they miss or will they hit? Constantly talking about inflation, talking about unemployment, talking about GDP. What is going to happen to GDP? What's going to happen to CPI? You need to understand that it's always going to be talked about. There's nothing that's going to happen. That there's nothing that they can do that will make that go away. All right. Okay. Thank you. I want to look at Danske. So when you have Danske Bank, so when you look at this one, and you're like, okay, so this is my screen. Okay, this is what I see. What do I go for? What do I see? Okay, so I see, first of all, my eyes goes here, weekly focus, and then it says hot summer adds to Europe area stagflation challenges. Then my eyes go over to this side there. That's actually the wrong way. Okay, up there to key global views, and then I look at key market movers. So if you look at key global views, high risk of recession in Europe in H2. That's a new situation. They were talking about Q1 2023 2 months ago. Okay, that's a shift. Then they expect the US to fall into recession in Q2 2023. That is earlier than they have previously said. They have said, I think it was halfway or Q4 2023. That is earlier than previously expected. And then they say that fake will rake another 125 basis points by the end of the year and then stop. That is a critical point. When the market believes that we are going to be stopping increasing of interest rates, what's going to happen to the dollar? We're going to fall. And we're going to fall way before the actual decrease of interest rates. But when the Fed next meeting, now Powell already signaled it a bit, but if they're going to signal more and be more like, yeah, we're going to be, the American economy is doing very well, and we think that we should be pausing a bit or taking a step back and looking into what is actually happening. That is your signal, mate. That is your, we're going to go down again. Okay, we're going to go down again on dollar. I'm just saying to you, so far still dollar bullish, but that you will see it on the charts. But okay, so where else do I look? I look at US CPI offered a positive surprise on inflation in a long time. However, it's too early to declare any victory over US inflation. Okay. Fed speakers also highlighted afterwards the labor market is still very tight and unemployment growth has not yet cooled down, suggesting that wage growth will continue to run high. That is actually the point, and the problem with wage growth is that wage growth is going to continue even though inflation is peaking, even though unemployment rate is still very low, because that is, generally speaking, at least, it's been negotiated every year, maybe every half a year now, but generally that is a year late, because people, for those who negotiated the rate this year with their boss or exchanged their new job this year, it will take them some time to work in that job before it actually comes back and hits the wage growth. Now, the problem in that scenario is that when wage growth is still rising, what happens to the business? The business goes down. The business goes out of bankrupt because they cannot pay for the wages, because they don't have enough income, because cost of everything is so high that they will not make money. That is a scary thought right now, and that can lead to recession. People losing jobs, people changing their spending, and not having enough money in their bank. Just be aware of that, okay? So, in the Eurozone, inflation picture has been further complicated over the summer by strong rising gas and electricity prices that will also lead to higher, inflation, sorry, mate. And then China concluded military exercises around Taiwan. So not really, nothing more there then. Market mainly respond to lower than expected US inflation in the print this week, sending euro dollar higher. Bond yields dropped, but the release will be moved higher again Thursday as optimism about lower inflation and rate hikes faded again. So, as mentioned, gasoline prices plunges. That would relieve some pressure on the US households or any households. I have seen prices in Norway go from 27 krona per liter to below 20 now for the first time in 2 years. This University of Michigan conference is a very intricate, interesting thing to look at. This one does move the market, by the way. This isn't like for kids standing in the line of, well, what are we going to do today, mate? This is important to know that this is a survey of how people or consumers things about their own economy, how much money do they have, how much savings do they have, how able are they to invest more money into whatever that is. So, as you can see, it has been falling, and now it bumped up a bit. But it has fallen from a very high peak. It really never recovered, and that is a worry, because those people that is now importantly not spending money or believe they're going to have less money to spend, those are the ones that are going to cause recession. Well, there's always a reason for why they don't have the cash, but just mention that so you guys know what causes a recession, and what's causing recession, according to my professor from uni. Humans, beings, stopping to spend, starting to not invest anymore, not thinking positive about the future, holding on their money, saving up, not going on trips, not doing this, not doing that, what they normally used to do anyways. Okay, cool, thank you. The other thing to look into is the inflation ahead. And if we are looking into like inflation, we can look into the yields. And yields the expectations for 5 to 10 years are around 3%. We thought we might have seen a decline given the gasoline price, but still, so far, no. Danske has given us a recession outlook, a yield outlook, and that is so far making the yields longer term or shorter term, or both, actually, both to peak a bit in America. Okay. Yields are still likely to tick up again, but right now we are just having a bit of a fall. Okay. As you see, because you can find it. So what has contributed to the recession fears? Just want to take that, and then we'll move on. High inflation is eroding consumers' purchasing power. High inflation has promoted central banks to increase their hike cycles pretty fast. And we have also, we have seen them from America, we've seen them from Canada, we've seen them from Norway, we've seen them from Europe, we have seen them from the UK, we have seen them from Switzerland, and almost everyone except Japan of the industrialized countries. The pressure on global commodities market finally looks to set to ease. Well, we have seen like a drop in commodities prices of 30% lately, or at least since the peak, as far as I remember, and that's all good. That's all good. But it still is pretty elevated. It is still pretty still pretty good, because you can see here that the global food prices has declined by 8%. Yes, but they are taking it back to 22 levels. Also, February 2022, we still are not back to 2020 levels, which is way better. The other thing is that Mr. Oil price is around 90 somewhere around there. We are still at very high prices, but this is the LME metals index, and we have fallen pretty considerably from 6,000 to 3.5. So that's a half in price, give or take. So that's good, but we need to stay down there for us to have any kind of considerable thing for the future. The only problem here, people, is how do we peak? Hi, Miro. Oh, wow. What's up, man? Dude, how are you? I'm good. And you? I'm about to boil down. I don't know. It's 29 degrees here, and it's cloudy, but yeah, it's all good. Not cloudy. It's sunny, so it's all good, mate. But yeah, me and the computer's about to what do you call it, melt away. The same thing applies to key industrial metals like copper and aluminum, already mentioned, whatever. Freight rates has also continued to fall over the summer. Furthermore, lower commodity prices and recession fears have lowered the inflation expectations in the market. Even though that has happened, it's still at very high, or it's still way above 2020. We are still way above everything and anything. So even though it comes down, which is great, lovely, we are not back to normal, which is pre-COVID times. Can we expect them to rise again? yes. If the fall and the recession doesn't really happen, and that the market or the consumers and the markets are able to catch the fall, and their purchasing power does not evaporate. Okay. If the war in Ukraine still happens, if supply constraints and issues of getting goods, I've seen one business now in Norway go down because they didn't get it goods in time. They got stuck with the evergreen thing in Suez Canal, and they didn't get the summer collection for the summer, and they got it in whatever October instead, so they went down instead. That is definitely a threat as well. Secondly, the risk of the market continued to underestimate the inflationary pressure in the economy, meaning that we still have what is necessary to still keep inflation going. Because for me, sometimes at this point, I'm still wondering, how do we still make this inflation go so high? The reason is literally, as far as I understand it, is businesses taking more and more money for whatever they're doing, and then they're blaming it on somebody else. But people still pay for it. Just saying. People still have money to pay for whatever corporations want to charge. And apparently Walmart CEO laughed when he talked about, or apparently, of how much you can charge people, and people still bought it. Welcome as a new member, Amaro. Boom. Don't need to, but I definitely appreciate it. I've been taking a chill from trading until September. July was amazing. August is terrible, so I'm passing this trading month. Anyways, everything is going good and steady. Okay, good. That's kind of what we want to see, anyways, right? That's kind of what we want to do, anyways. I just want to understand what this means. Market pricing in ECB in large and its serious rate hikes as early as this year. Principle. This is in line with our view for ECB forecast. So rate yields will go up because they're still going to increase interest rates anyways. Okay, cool. Okay. So that is that. That is also very interesting, that increasing interest rates going into a recession. But whatever. So, did we learn something new today? And then this is the global industrial cycles is currently trending down. Okay, that's good. That is recession. That is kind of what I want to see anyways. So don't burn me for it. But we need to have a reset. I don't want a great reset, but I want us to be, we are a bit too high. That is that. Okay. I thought you said something, Miro. Okay, maybe took it away. That's that, and then we continue on. Okay, so that's that. Eurozone just jumped in June. Just going to say that UK economy contracts as winter recession grows, risk grows. Yeah, that is kind of another one you need to look into. So, rising consumer confidence should be a good news all around. Eurogas developments remains worrying because it's so high. UK data not quite as bad as expected. Hungary rates. The thing is that UK is probably going into a recession before Europe, as far as I understand it. So the last GDP was a negative. I think it was negative 0.1. So when that's being said, it's definitely worrisome. I was supposed to bring you something, but I'm not finding it right now. Even though it is, negative this quarter, it needs to bring up more going forward. Now, going forward, ladies and gentlemen, what do you expect for this fall? What do you see? What do you mean? What do you see, Eivind? You need to answer the question just as much as I do. Recession fears are going to make dollar stronger up until the Fed says they're going to stop increasing interest rates. The market probably already fell before that. We are going to see increase of recession fears in Europe and UK and America. That's what I expect. In Japan, it's still going to fall this fall because they still aren't able to get their inflation up and running. To believe there's going to be inflation in Japan is the same thing as believing there is gnomes underneath your bed every night. As an adult, you know very much better than that. The other scenario that I see is currently in the market, I see a lot of things setting up for yen pairs to fall. So pound yen, if I was trading, and I didn't trade it, but come back to me later and and say you should have done it, that is a sell. Then next week you should look for sells again. Though we are in a range, but it's setting up. New Zealand yen, I made a funny entry here on the VIP webinar for A1 people. It was just to show you that what happens when you buy high. And then 2 hours later, it was lower, as I could have bought it lower. But to me, whatever this price action is called, it's a bit, weird. I'm just waiting this one to fall. So I am all for a sell next week. I see it setting up itself. So if you can reverse, go lower, make a new lower low. And by the way, it's going to be not a reversal you ever going to believe is going to be there. Okay? So it's going to fall. Sorry. It's going to fall just because it's going to fall. No setup, no reversal. It just fell. What do you think? So do you think indices will fall? I don't want them to, but it's kind of the reason. It's kind of that should actually follow through with my reasonings. Sorry. So yeah. Okay, continue. Yen pairs, New Zealand yen, Aussie yen, CAD yen, Euro yen. I'm all waiting to sell them next week for the reasons of seasonality, and I'm also just waiting to buy them 20th of August anyways. So 22nd, that is not this Monday, but next Monday. And you're wondering, like, why? Lack of inflation in Japan. We are I'm still seeing that going to be the weakest link. Wouldn't that mean that you can buy USD yen then? No, sorry, dollar yen. Yes, that means absolutely you can buy dollar yen from 20th. But historically, there hasn't been like the most fantastic trade. But sure, there's money in there. Go ahead, knock yourself out and see yourselves through. S&P 500 moves quite high on Friday. I acknowledge that. On the morning of that day, I said maybe go down to 41,006. It didn't happen. Okay. Yeah, okay. But it still goes in line with what I want to see, but I fear it will fall. I think we can now say that we have reversed. It doesn't mean we will not fall. It just means that it's messing up my brain, kind of a thing. Because what I see going into the future is a fall in the stock market, but it's currently rising. what do you do? Then you do one or two things. And then you close your eyes and you can just buy it, or you wait for it to become bearish. It's just waiting. So in a nutshell, GA, GJ, EJ, AJ, NJ. So yes, correct. Correct check. Correct check. Add New Zealand in as well. Do that. Euro New Zealand I wanted to buy, but it fell, so I don't care. Also, dollar is rising. I don't really have any good situation here for a year. I don't have a good setup. I don't have a thought process. I'm just observing it going higher, and then we will take the rest later. Euro dollar, as you can see, is not bullish. It didn't rise higher. It actually went lower. Maybe that will to pick up more sellers, but to pick up more buyers. But this is definitely bearish at the moment. Bearish, 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 bearish. If you're buying, get out of there. You have nothing to do there. New Zealand dollar, another one that is just high. What I wanted to do more. Gold is still rising, struggling at 1800, but I have got what I wanted here. I wanted bullishness, and I got it. So I don't feel too close to relationship to this one anymore. Oil is currently in a bearish trend, went up to 94. I'm not going to add more. I had my sell. I wanted to, and Bob's your uncle, mate. Bob's your uncle. I just wanted to continue to fall. And then nat gas, you know, it's a day trade every day, looking, is it bullish, is it bullish, is it bullish? Buy yes, and if it's not, just leave it alone. Totally up to you. I'm not going to give you any signals to buy it or anything, but it's definitely at this point bullish only, so wait for it to come back to resistance. Support, sorry. Bitcoin just for 24,000, nothing in particular here. USSR is bearish. Is it supposed to be bearish now? Yeah. I think the pickup is going to come later. We just need to see a lower price first, and then we can take it up again. So I don't know where the bottom is going to be, but you can look for a buy somewhere between here and September, end of September. But yeah, somewhere. So right now, just wait a minute. That's all. So what is the nutshell today? Sorry, what is the process today? The process today is straightforward and simple. Okay. Risk of recession in second half of the year in Europe. Risk of recession in America for Q2 2023. Inflation to peak in Q3 hasn't happened yet. Wage growth continued to stay higher because that is lagging. Inflation in Europe is going to stay elevated in Q3 and higher because of higher electricity prices, and that's not going to go down at all. Easing pressure from oil, metals, and freight will put global inflation lower in 2023. Dollar COT, gold COT, euro COT, Aussie COT, and Japanese yen COT. Just going to go fast with them. Dollar, nothing changed. Generally still very long. People are still adding more positions to dollar longs, even though shorts are coming in more. People are taking off their short positions on gold, meaning higher. Euro is getting more buys and shorts, but still, generally speaking, flat 53, 53 and 46. So people still split about the euro, and the Australian dollar. Everyone is still split of where we're going to go, but generally people are still shorted. And the Japanese yen, we are seeing more buyers coming in, people taking profit on their shorts. so they can short it at the higher price. All right. So what about pound Aussie? I can do that, mate. I'm not going to disappoint you, but it's going to be the last one. Just going to mention that one. What about pound Aussie? Is it selling yet? We will have a talk, Jack, about it. Welcome to the membership, by the way. But pound Aussie, is it a sell? That's a sell. It has been a range and probably is going to range, and it will always be a disappointment of ranges. But yeah, it is. Technically, you're supposed to look for it to come back up again before selling it again. But okay, fair enough. 72, 73 levels and see how things goes. But I won't be too eager on it, to be honest. Okay. At least don't sell it before 71, 77. But make sure you do proper entries and don't just butcher it. I don't like this one, so be careful, mate. Be careful. Okay, people. I hope you guys are having a good day. Jack, I saw that you became a member in the last stream I did. I didn't see it because of StreamYard, but other than that, thank you very much. I'm very happy to have you on my team. Everyone who else is members, thank you very much for being on my team. I am trying to give you more and more fundamentals. I need to do better every Sunday, and if this was better, maybe it was better, maybe it wasn't, but I will do better next time. So boom, have a good day, see you soon, enjoy yourself.